This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Leverage is a DEX, so you can trade with your keys and sign orders with just one click. And Leverage is fast. Yes, indeed. Leverage is powered by Gluon, a layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. That's right, Leverage combines the best features of CeFi and DeFi so you can trade crypto spot and derivatives with up to 100x leverage while maintaining control of your assets at all times. And this month, Leverage are running a trading competition with a $25,000 grand prize that goes to the account that gets the largest dollar value increase over that period. And there's lots of smaller prizes too. Want in? Of course you do. If that's you, go to leverage.io for all of the details. And of course, Leverage is spelled Leverj.io and trade the future of crypto today. And now it's on with the show.
Yeah, boy!
My guest today is Aditya Das. Aditya is my colleague here at Brave New Coin, as most regular listeners should know by now. And Aditya is here today because he wrote a recent piece for Brave New Coin about the Ethereum EIP 1559. So this is the Ethereum Improvement Proposal. It's one of the most significant and contentious alterations to the Ethereum blockchain. It was first proposed by Vitalik himself back in 2018, and so it's a highly anticipated upgrade, and there's a lot of interest around this new upgrade. So that's what we're here to talk about today. Yeah, so Aditya, welcome to the show. First off, do you want to just explain what an Ethereum EIP is?
Sure. Thanks for having me, Andy. An EIP is an Ethereum Improvement Proposal. EIPs are design documents providing information to the Ethereum community that describe a new feature for Ethereum or processes or environments. EIPs provide the technical specification for a new feature that is proposed to be added to Ethereum and the rationale behind this feature. Notable EIPs in the past that people may be familiar with would be things like EIP 20, which introduced the ERC20 token issuance standard.
Got it. So it's basically an EIP it's a proposed improvement to the Ethereum blockchain. And well, this one in particular is EIP 1559. And as I understand it, it's kind of designed to flip a typical blockchain transaction on its head, the intention being to improve the Ethereum user experience. But look, talk us through it then. So what are the main components of EIP 1559? What is it setting out to achieve, and how does it propose to do this?
So at a high level, EIP 1559 has two key changes to the gas model of Ethereum. One will help users pay less or more deterministic fees, and the other will ensure that transactions are pushed through quicker and settle quicker. With EIP 1559, the gas model or the transaction fee model in Ethereum won't have a single fee anymore, as it does now. It proposes that gas will be split into two parts. One part is called the base fee, and the second is called the inclusion fee or the miner tip. The base fee is burnt, while the miner tip or inclusion fee will go straight to miners' pockets. Traditionally, users send a gas fee to miners for a transaction to be included in a block. The gas fee will now be sent to the network itself as opposed to being sent directly to miners, and will be burnt, and the portion of the gas fee that burnt will be the base fee, and only the optional tip will go to miners. The burn amount or the base fee will be algorithmically set and based on information in the previous block. So unlike now where we have this kind of user versus user auction model, fees are set to become more deterministic and based on algorithms and data from previous blocks. With EIP 1559, perhaps the most high-level change that people will be observed, with each transaction on Ethereum, a portion of ETH will be burnt. So more transactions on the network, more ETH being burnt, and potentially kind of a larger supply shock or supply reduction mechanism included into the network.
Got it.
The second change is a new elastic block size model. So block sizes will now dynamically increase or decrease depending on the state of network congestion. So there currently, actually in the last few days, the gas limit on Ethereum increased from 12.5 to 12.5 million to 15 million. And after the London July hard fork, where EIP 1559 will be which has been one of the accepted Ethereum improvement proposals, the gas limit on blocks is going to jump from 15 million to 25 million. The way it's going to work is there's going to be a targeted amount, which is going to be 15 million gas per block. And depending on how congested or inactive the network is at the time, the gas limit will change and the base fee will change based on that. So if the network is getting more congested, there is a bit of room for the size of blocks to go as high as 25 million with fees increasing. And if it's below, fees reduce to encourage more network activity so that we can hit that kind of sweet spot of 15 million gas per block.
Got it.
Going a bit further and taking a step back, the current Ethereum gas model is based on a simple auction model called a first price auction. In this model, transactors submit gas prices they're willing to pay for a transaction and compete with each other for space on an Ethereum block. Miners monitor these bids and pick bids based on who is willing to pay the highest gas price and who will maximize their profitability as miners. Users have to pay higher and higher gas fees during times of network congestion and during times of network popularity in order to get included into blocks by miners. With a set gas limit the way it is now, where it is, 15 million units, the only way to get into blocks is by paying more gas. So the system is inefficient and has lacked transparency for a while, and it's been a constant sore point for Ethereum users and has meant many times overpaying for transactions or waiting too long for transactions. What we have seen recently with the spike of sectors like decentralized finance and non-fungible tokens is that gas has been rising both in US dollar terms and in ETH terms. And with the price of ETH rising in US dollar terms, it's just been, users have been fighting an uphill battle. So with this chaos going on, it's kind of pushed Ethereum developers and the Ethereum communities to use something like EIP 1559 that solves 4 key issues with the current gas model and the first price auction model. 1 is making transaction fees more predictable. 2 is reducing delays in transaction confirmation. 3 is improving the user experience by automating the fee bidding system. And 4 is creating a positive feedback loop between network activity and ETH supply. So that's pretty much what this EIP is all about. Trying to make fees more algorithmic and making the fee system more efficient during times of network congestion.
Very nice, Aditya. And look, in the course of my research, I made a few notes on this, and so I hope I get this guy's name right. So he is one of the 6 primary authors of EIP 1559. So he's one of the Ethereum devs. Abdulhamid Bhakta, he is on record as saying that, reducing congestion and high fees is not necessarily, the primary purpose of this EIP, but rather it's what you were talking about, this concept of block elasticity, which really means, doubling the theoretical maximum capacity of Ethereum and the block sizes. So that, and I think the idea, what he's saying is, this is just one piece of the puzzle for Ethereum. It's one step in the right direction, but there's a long and twisty road to go. There's a need for more layer 2 solutions to continue to be adopted and implemented, so all of these, the network fees and congestion issues can be eventually sorted out right across the ecosystem. So I guess what I'm saying is, I think it's important that people shouldn't see this as an instant fix, but it's more a very valuable step in the right direction. And I guess one way of looking at this is, because you and I were talking just before we started recording, Ethereum has just hit an all-time high a few hours ago, really. And I guess that's just, obviously we're in a bull market, but people have been kind of pricing this in. And I think it's just the market is saying that this is a step in the right direction is one way to interpret that, right?
Yeah, no, absolutely. And just touching on the point that about block elasticity, one way I've seen EIP 1559 being described is replacing variability in fees with variability in block size, which, I mean, on the face of it, seems like a more of a sacrifice that users are willing to accept. They rather have larger block sizes than larger fees. Okay, going back to the point about market optimism and EIP 1559, yeah, it's. I think most people have reacted quite positively about it. Excitement about the upgrade has been a huge factor in Ethereum's ongoing price bull. Since the EIP was confirmed, the price of ETH has risen by more than 60%. It's not even like the story has been fully priced in yet. We're still trying to understand the implications and how this might affect the network and user experience, the improvements to user experience, and potentially the deflationary pressure it's going to put on Ethereum. What early estimates are saying that currently Ethereum has an issuance rate of 4.5% a year. According to estimates, with the new proposal, the rate of issuance is going to drop to 0.5 to 1% a year. So with factors like the Ethereum ETF and EIP 1559, there's real optimism for the price prospects of Ethereum heading into the second half of 2021. You can see signs in the options market with a contango premium opening up and the price of Ethereum futures being higher than the spot price. So yeah, I think EIP 159 combined with a few other factors are leading to a lot of optimism for Ethereum's price prospects in the near future.
Yes, that is right. And of course, the background to this as well is, Ethereum is very much under pressure at the moment with the rise of all these other smart contract platforms, and they're starting to see a lot of adoption and very, very good, bull market price performance as well with, platforms like Solana and, of course, the Binance Smart Chain. But meanwhile, of course, Ethereum just has this incredible community of developers and users and DeFi, NFTs. It is still all sort of based on Ethereum, and you're right, Aditya, and that everyone is very bullish. However, there's one group of ecosystem participants, I think, who have slightly less excited by this particular EIP, and they even opposed it, right? And so, that of course, I'm talking about the Ethereum miners. So, what's the problem with this EIP from the perspective of the mining community on Ethereum?
Yeah, so it's almost a certainty that once the EIP is implemented, mining profits will fall. With the new fee model, transactors can add a mining tip on top of the base fee as a separate fee that can be offered to miners to incentivize them to prioritize a transaction. So that makes it quite similar to the older model, where if you pay more, then miners are more likely to pick up your transaction. But because there's a possibility that miners could collude to fix the base fee in their favor, the entire base fee for each transactions, we referenced a burn earlier, so the base fee is going to get burnt. Miner tips and the block reward will still be received by the miner. However, before they would receive the entire transaction fee plus the reward, now a portion of that transaction fee, which is the base fee, is going to get burnt and going to go, is going to be removed from the network. The new gas fee model also comes with a fee cap option that will allow users to limit how much they want to pay for a particular transaction. So again, this is similarities with the old model. If you want to pay less, and you can set the gas you want to pay or the gas limit for your transaction less than the base fee, then you can wait until a point where there's less congestion and the set base fee drops to a point where if you've set a lower gas limit for your transaction, it'll get picked up.
Right.
So yeah, with EIP 159, users, investors, holders of ETH are all likely to benefit, but current proof-of-work miners are set to lose out. Last month, Ethereum miners made a pretty staggering $1.3 billion, and almost 50% of it came from transaction fees.
Wow.
The new gas rules mean earning less profit from verifying transactions. When congestions were high on Ethereum, miners were raking in profits. The block reward is fixed, but transaction fees are variable. So even if you have this guaranteed block reward, your transaction fee revenue has the potential to skyrocket. There were times, during the last year when things were really busy, when yield farming and the DeFi was, blowing up, that transaction fees were even higher than block rewards because of the highest bidder wins fee system. With the new fee system, miners, as mentioned earlier, are only going to earn the block reward and the miner tip and lose out on the base fee. The new model is taking fees that would have previously gone to miners and burning them. So that immediately affects their short-term bottom line, and many have spoken out against it. And just going back to what we mentioned earlier in terms of times when the transaction fee is higher than the block reward, that kind of fee burning mechanism can mean Ethereum can be more of an inflationary asset when the block rewards are higher than the transaction fees during times when the network is less busy, which again could be a possibility, as you mentioned, with things like Solana and Binance Smart Chain popping up. But when the network is really congested and transaction fees are high, there's more of a base fee that gets burnt, and it means that ETH becomes more deflationary. So what we could potentially have is a very complicated monetary policy that is a bit uncertain, and that can create like noise for investors. It means the thesis behind Ethereum changes quite a bit. And yeah, it just means it becomes a little bit more unpredictable, and that could lead to volatility in price. That could lead to kind of just misconceptions about how the network works. So while EIP 159 is an important shift and it fixes a model that has been broken and inefficient for a long time, there are potentials for it to create some chaos.
Yeah, that's really well said. Aditya, and I guess it just goes back to that kind. It's a little bit of a cliched narrative by now to compare, Bitcoin as being this, slow-moving dinosaur where everything is set in stone. And while it's very hard to make changes, and the sort of the tech can be seen as slightly outdated compared to many of the new chains coming online today, the positive side of that in the case of Bitcoin, of course, is if you're going to store, let's say, a significant portion of your life savings, or do some kind of transaction that is extremely high value, then you just want a good, solid, old, reliable blockchain that is battle tested. Whereas Ethereum, of course, a little bit faster moving, and perhaps they are sort of changing the engines on the jet as they fly through the air. But that's just how innovation works, and it's good to have slow and steady and fast and a little bit riskier, right?
Yeah, absolutely. And I'm sure this probably won't be the only time gas changes when ETH2 is implemented, or even, in the last week, they had to make a sudden increase in gas because of the Berlin hard fork.
Yeah.
And they decided to change it from 12.5 million gas units to 15 million units. So, yeah, I mean, they didn't expect at the time they would have to do this like short-term fix before the July hard fork, but they have. So that's just, as you said, the nature of Ethereum. It is, as Vitalik has said many times, still a prototype, still needs to be modified, still needs to be worked on. So, I think that's going to continue to be a narrative for Ethereum for, for a while, for the, any time in the future that you can think forward to.
All right, Aditya, let's finish this off. So I guess, the kind of the summary as I see it is quite simple, and it is simply that, it's not going to solve all of Ethereum's problems overnight, but it's just part of that puzzle, and will be interesting to see how all this plays out. Let's just finish up on the price action. So just looking now, I see, Ethereum's at 2,636. So that's an all-time high, isn't it?
It is an all-time high, yeah. I think earlier in the day it might have hit 2,650. So it's hit an all-time high in the last few hours.
Yeah, you're right. Yeah. So, okay, well, look, put you on the spot then. What happens? What happens from here? So we've recovered quite well from, that. I guess you'd call it was it a correction? Not so much a crash, but it was definitely a steep correction last week, and there's been a really swift recovery across the market. I mean, Bitcoin perhaps moving slower as you'd expect. Altcoins have jumped right back up, and really good to see Ethereum at a new all-time high. What happens next, my man?
Well, I am quite bullish about Ethereum's prospects heading into, the northern hemisphere summer, and heading into months like May, June, and July, because of factors like EIP 1559, and because I think it seems pretty almost a foregone conclusion that an ETF will be passed. ETH has got a lot of validation as well, and endorsements from names like Raoul Pal and Mark Cuban, and things like the NFT ecosystem and the DeFi ecosystem continue to grow and optimize. So I think Ethereum, this sort of evolving monster that figures out ways to get things done and solve issues and plug holes. I think short term, I'm not sure. We're seeing a lot of volatility. And I think, as we discussed earlier with EIP 1559, the biggest misconception people might have about it is that it's definitely going to reduce gas costs. That is not the case. It could reduce gas costs, but the main feature is that it's going to make them more deterministic.
Yeah, that's right. And look, interesting that you talk about people like Mark Cuban and Raoul Pal, and this is a lot of buzz as well around the ETH BTC pair, right? And people really, the Ethereum community certainly really expecting the Ethereum price to really appreciate against Bitcoin as the sort of as alt season takes over or continues, if you like, right?
Yeah, very true. It's broken some key resistance levels recently. So yeah, I think some really big optimism that ETH is going to keep gaining value against BTC, and it's going to keep breaking through resistance levels. And yeah, it seems to be a pair that everybody in the market is looking at right now.
That's right, Aditya. Well, that seems like a nice place to finish. So I think, we're in agreement that the future looks turbulent but bright for Ethereum. Thanks for coming on the show. All the best, and see you again very soon.
Thank you for having me, Andy. And yeah, disruptive, turbulent, ETH's future is going to be a fun roller coaster to be on.
Yes, indeed. All right, that's us for today, folks. Thank you for listening. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. And look, if you want to get us, if you want to get at us, feedback, questions, or whatever, just shoot me an email. I'm on andy@bravenewcoin.com. And well, Aditya is aditya@bravenewcoin.com. And yeah, that's us for today. This was the Crypto Conversation for